If you are over 50, there are some things you should stop spending money on immediately. Not because you should live scared. Not because you should never enjoy your life. But because after 50, money changes its job. Every dollar is no longer just paying for today. It may also need to protect your retirement income, your healthcare costs, your emergency fund, and your ability to stop working one day. And the dangerous part is this. Most people do not lose retirement security from one huge mistake. They lose it slowly. One payment at a time. One habit at a time. One unnecessary expense at a time. Today, we are going to look at 9 things people over 50 should stop spending money on immediately, especially if retirement is getting closer and your savings are not where you want them to be. The first thing to stop spending money on is lifestyle upgrades you cannot truly afford. This can be a newer car, a more expensive phone, new furniture, a bigger vacation, or home improvements that are more about appearance than necessity. The problem is not enjoying life. The problem is upgrading your lifestyle while your retirement plan is still weak. Imagine John, age 58. He is behind on retirement savings, but he buys a newer car because he feels embarrassed driving the older one. The payment fits his budget today. But now that payment competes with emergency savings, debt payoff, healthcare preparation, and retirement contributions. Scenario A is simple. He keeps the older car a little longer and uses the difference to reduce debt or build cash reserves. Scenario B looks better from the outside. But every month, the new payment quietly steals flexibility. After 50, a lifestyle upgrade can feel like comfort today and become pressure tomorrow. The second thing to stop spending money on is unused subscriptions. Streaming services. Apps. Memberships. Cloud storage. Fitness plans. Software. Delivery programs. Monthly charges that keep renewing in the background. Each one may look small. $10 here. $15 there. $20 somewhere else. But after 50, small leaks matter. Because money that disappears automatically cannot protect you later. It cannot help with a medical bill. It cannot reduce debt. It cannot build an emergency fund. It cannot support retirement income. The danger is not one subscription. The danger is not knowing how many you have. The third thing to stop spending money on is high-interest debt. Credit card interest is one of the most dangerous expenses after 50. Because it does not buy anything new. It does not build security. It does not create income. It simply takes money from your future and sends it to the lender. Imagine Linda, age 61. She thinks she is managing because she can make the minimum payments. But the balance barely moves. Every month, interest takes money that could have gone toward her retirement. Scenario A is reducing the balance aggressively and stopping new charges. Scenario B is carrying the debt into retirement and hoping the income will be enough. That is dangerous. Because retirement income may be fixed. But debt payments are not emotional. They do not care that you are tired. They do not care that prices went up. They do not care that healthcare got expensive. After 50, debt is not just debt. It is a claim on your future income. The fourth thing to stop spending money on is expensive convenience. Takeout. Delivery fees. Impulse online orders. Last-minute shopping. Convenience store purchases. Paying more because there was no plan. Convenience feels harmless because it solves a problem quickly. But when convenience becomes a routine, it can quietly drain hundreds of dollars a month. The issue is not buying dinner sometimes. The issue is using convenience as a financial lifestyle. After 50, convenience should not replace planning. A basic grocery plan, a weekly spending limit, or preparing simple meals at home can protect more money than many people realize. And this is not about being cheap. It is about not letting small daily choices weaken your future. The fifth thing to stop spending money on is adult children's lifestyle support when it damages your own stability. This is one of the hardest ones. Because it comes from love. Many parents help adult children with rent, bills, phones, cars, loans, or emergencies. Sometimes help is necessary. But constant help can become a retirement trap. Imagine Robert, age 63. He helps his adult child every month. At first, it is temporary. Then it becomes normal. Then Robert realizes he is using money he actually needs for retirement. The painful truth is this. Your adult child may have more time to recover financially. You may not. This does not mean you stop loving your family. It means your retirement cannot become the emergency fund for everyone else. The sixth thing to stop spending money on is financial products you do not understand. After 50, many people become afraid of running out of money. And fear makes certain words sound powerful. Guaranteed. Protected. Tax-free. Safe. Exclusive. Retirement solution. But if you do not understand the fees, restrictions, risks, surrender periods, taxes, or long-term consequences, you should slow down. Confusion is expensive. A product can sound safe and still be wrong for your situation. Before spending money on any financial product, you should understand what it does, what it costs, when you can access the money, and what happens if your life changes. If the explanation is too confusing, that is already a warning sign. The seventh thing to stop spending money on is storage for things you no longer use. Storage units often start as a temporary solution. A few months. Then a year. Then several years. And suddenly, someone has spent thousands of dollars storing things that may not be worth thousands of dollars. This matters after 50 because many people are trying to simplify, downsize, or prepare for retirement. But instead of freeing up money, they keep paying to preserve clutter. Sometimes the most valuable thing you can recover is not the stuff. It is the monthly payment. The eighth thing to stop spending money on is a house that is too expensive for your future income. Housing is often the biggest expense. And many people over 50 hold on to a home because it feels familiar, safe, or emotionally important. But a house can be paid off and still be expensive. Property taxes. Insurance. Repairs. Utilities. Maintenance. Aging systems. Unexpected damage. A large home can quietly drain retirement savings even without a mortgage. This does not mean everyone should move. It means you need to look honestly at whether your housing cost fits the retirement life you are actually building. A home should protect your future. It should not consume it. The ninth thing to stop spending money on is small waste you keep telling yourself does not matter. This may sound simple. But it is powerful. People say, it is only $20. It is only one lunch. It is only one fee. It is only one purchase. But retirement pressure is often created by repeated small decisions. A few forgotten charges. A few impulse buys. A few unnecessary upgrades. A few expensive habits. A few fees you never question. Over months and years, those small decisions can turn into serious money. After 50, the goal is not to become afraid of spending. The goal is to become intentional. Spend on what truly matters. Cut what quietly weakens you. Protect what gives you options. So let's bring this together. If you are over 50, stop spending money on lifestyle upgrades you cannot truly afford. Stop ignoring unused subscriptions. Stop feeding high-interest debt. Stop paying too much for convenience. Stop supporting everyone else if it damages your own stability. Stop buying financial products you do not understand. Stop paying for storage you do not need. Stop carrying housing costs that may not fit your retirement income. And stop pretending small waste does not matter. Because after 50, money has to do more than pay bills. It has to protect your independence. It has to protect your income. It has to protect you from emergencies. It has to protect your future choices. And sometimes, the fastest way to improve your financial life is not to earn more first. It is to stop money from leaking out in places that no longer make sense. You do not have to fix everything today. But you can find one expense that is weakening your future and cut it. Then find another. Then another. Small changes create breathing room. Breathing room creates better decisions. And better decisions after 50 can change the retirement you are walking toward. If you are over 50 and want to avoid the retirement traps most people discover too late, subscribe to Money After 50. This channel helps you understand the money decisions that can protect your income, your savings, and your retirement before life gets expensive. This video is for educational purposes only and does not provide financial, tax, legal, or investment advice. Always consult a qualified professional before making financial decisions.